So far throughout the day, gold and silver both traded in a very narrow zone, and now the world awaits the US inflation data. As the same time, the gold and silver are waiting for the data as well. So far, no real move has been seen. So now what to expect? Which position you should take trading gold and silver? We will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. This is the second update for the day. And likewise, the next update will be released before the Asia session to watch that also. Let's start first to look into gold followed with silver to watch till the end. Also, you can subscribe to my free Telegram channel where you get the live market updates. The link is mentioned in the channel and video description. Now you can see trading with a bullish bias. You can see the price was divergent from the moving average. It has converged till towards the moving average, now consolidating here. Also, you can see 4 to 5 candles failing to break below 1934. And as we discussed in the Asia session update, that possible sell can be taken at 32. However, below that 30, 28 and then 24. 24 is the strongest support. Even if it tries to drop, this is the level below which only further you can say that the bears are back and it is going to trade bearish. Also on the upside, 1940 is the level above which you can expect it to fly high. So in between 1942 and 1932, we are not going to take any trade. Similar observation what we have seen in the Asia session. The stochastic on the hourly charts is oversold. The MACD is divergent and bearish. RSI is also trading comfortable, neither bullish nor bearish as of now. And if you look at the 2-hour charts, on the 2-hour charts, see, first of all, look at the previous few candles, lower highs, lower lows. Yes, in fact, even if it tries to rise, I will observe at around how it behaves at around these levels. Else, you can see increasing body size in the preceding two candles, which means a break on the downside should bring a little more bearishness. How far it can go? See 1930 levels, 1924 levels, very good support till here. And also, if you look at, see, if you connect this, so far it appears the bulls are very well aligned, and now the support is seen at 1930. Below that 1924 is a greater support, and this is the line which I will expect is to give maximum support, which is situated at around 1920, only below which you can expect further bearishness. And you can say that gold and silver are, specifically gold, is going to break downside. So 1920 levels you should mark out. Stochastic oversold, MACD taking a bearish cross here, and it is coming at a slightly higher level. See, this is the first wave, this is the second wave, third wave, or you can say the next leg for this wave is about to start. RSI has dropped, and on the 3-hour charts, similar observation, nothing different. I will watch out till towards 1942 levels, above which only a buying entry is recommended. At the same time, a selling entry can be taken at 1932. However, be very cautious and alert for 30, 24. So these are definitely critical levels on the downside. Very good support. See, prices are right now divergent here from the 20 period moving average, which is also situated at around 1930-31 levels, and then the next support at around 1926-24 levels. So as I said, till 1920 we should not treat this as bearish. A sharp drop till towards these levels can be expected. However, still it is going to remain in this bullish channel. Be careful. Stochastic is dropping there on the 3-hour charts. Now look at MACD. See, first wave, second wave, and now third wave is beginning here. So if it crosses over, converges, crosses over, which means one red candle, so this could bring the prices little lower. We have to be observant here. At the same time, now see, there is room for it to continue till here. If it continues on the upside, there is a good sharp rally can be expected. Stochastic RSI has dropped here, and on the 4-hour charts, if you look at, now see on the 4-hour chart, see moving average crossover here, 20 and 50 now are trading with divergence. The prices are divergent from the moving average. At max, even if it tries to drop, 1924 and 1920 levels are greater support, only below which are bears to pitch in, or you can say that the bears might kick in there. Stochastic has dropped. The MACD, now see the MACD here is, as we have seen, first wave, second wave, third wave is beginning here. Wait for it to give a red candle and wait for it to cross over, then you can say that it can go for a sell, else probably a stronger divergence can be expected. RSI comfortable. Coming to the daily, Now look at daily charts here. See, the preceding day, day before candle was with a sharp tail, then the previous candle with a wick out there, and this candle has still room for it to continue with the bullish momentum. So possibly once it stays above 40 to 45 zone, you can say we can expect a very sharp rise, which might in fact take it till towards 54 and in fact 60 levels. So this is something you should watch out for. On the downside, now this is the support level here at 1924.25, which if it breaks, also it could show a very sharp swing. We have to be careful. This is the support level here at 1920.18, where it is going to get maximum support. Stochastic near to overbought levels. MACD is divergent and bearish here. It is looking upwards. RSI is almost flat. Now considering this, the levels remain same. 1942 you can buy. However, for 1945, 54 and 60 are three major levels, and rather 65, three major levels there where it is going to get maximum resistance if it continues its upward move. Else you can see this, what has happened so far is after the drop it is retraced here, and if it breaks on the downside, this should bring more strong bearish move. We have to be careful there. Also, one must note that till 1918, 1920 zone, we should not treat this as bearish. Specifically, if it stays above 1918-20, we can say that more bears might pitch in, and then we can say, or we can expect a further sharper drop. So take your positions accordingly. Now let's have a look at silver. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. 23rd batch started a couple of days back. You can now be part of the 24th batch starting in the first week of August. Limited seats are available. Register yourself of itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at the hourly charts for silver. If you look at the hourly charts for silver, you can observe, see lower highs, lower lows. So how far it can drop? Still, as we discussed, 2280 and 2270 zone. Do not treat silver as bearish. This should be a possible retracement only if you see it trading below 2280, 2270 zone. You can say that silver is turning bearish, and then possible sharper crash can be expected. Stochastic here at bottom, the MACD crossing over for a sell, RSI looking downwards, showing slight bearishness. And if you look at 2 hour, now look at 2 hour chart, see further bearish candles, lower highs, and once it drops below, see 23.10, $23 levels still are very good support. And as we discussed, till 22.80 it has got very good support here. And hence, if you sell, you can sell here at 23 first of all, but then you can expect 22.90, 22.80, 22.70 as the three major support levels. Below 22.70 only further sharper drop can be expected. Now see what it is trying to do. It is trading in this channel here, and right now it is looking downwards. If it breaks below, certainly more bearishness may prevail, but till 2280 chances of reversal will exist high. Stochastic dropping there. MACD is divergent and bearish here, looking downwards. This is one important observation. RSI is also trying to trade with a slightly negative bias. And on the 3-hour charts, now look at 3-hour charts. See, first of all, 20 and 50 crossover, now 50 and 100 crossover. This is a good bullish sign for silver. At the same time, the prices were divergent from the moving average. It has converged till towards these levels. At max, we can see a particular drop till towards $23 levels, which is going to be a very good support. And below that only a little more drop. However, as we discussed, 2280, 70, you have to be watchful of. Stochastic dropping there. MACD crossing over for a sell. Important observation. This is, if it continues here, it can bring more bears. RSI flat. And on the 4-hour charts, now look at 4-hour charts here. Couple of candles almost at the same levels. We can see retracing from here. And yes, you can sell in fact at 2310 also, but then be careful. As I am saying again and again, till 2280 you have to put the stop loss at your entry price and then only take a short position. And buying entry now, only buying entry now again is about 2330, where you can expect this time we may see 2350 and 60 zone, very good resistance. About 2360, sky is the limit. Stochastic dropping here. MACD crossing over for a sell, divergent and bearish here. RSI looking downwards, showing slight bearish indication. Coming to the daily charts, if you look at the daily, see first of all, the preceding candle was a swing candle. It has closed in a doji, and this candle almost opened above. Now see, beyond 2310, $23 levels, very good support, until 2280, very good support, only below which you can expect that it is trying to break on the downside. Now remember, one more point I would like to highlight here is, I have highlighted in my each and every video, see the drop, retracement. And now if it drops, it is going to bring more bears out there. The stochastic near to top, MACD divergent and bullish looking upwards. And if you look at RSI, this is flat. So considering this, I will recommend you to sell here at 2310. However, remember till 2280-70 zone, the chances of pullback will remain very, very high. You have to stay cautious and alert till then. And on the upside, you can buy here at 2330. However, 2340, 50, 60 till 60, you have to ensure that it is your stop loss at your entry price, so that your prices or your capital is preserved. Remember, 2350, 60 is the zone which, if it breaks, you should entitle it for a reversal, and then one can expect 24 and plus levels. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.